My fellow friends and investors of real estate investment trusts, the S-REIT markets and the S-REITs actually started reporting corporate results this week. Essentially, what can one look for? What are the nuances? What are the language? What are the preparations that you as an investor should have prepared for? Let me share with you what we shared with GCP Global students in our past 1 year classes preparing for this corporate results season. Now, in this week's video also, we are going to share, in addition to what I expect for this current corporate results seasons, the subsectors to watch, and most importantly, which are the REITs to watch. This week, essentially, we have two events unfolding. Which was predictable. One was the demise and the huge price fall of Keppel DC. Now, in this case, essentially, it was more because of uh, anticipated events, which one could have expected much earlier, which we shared with GCP Global students. And let me just go through with you later on how were we able to anticipate this right to the core. The second one was actually Frasers Centrepoint Trust, which came to the market as expected. They went in to raise funds to actually buy the additional 24.5% in next shopping mall. Again, something that we have predicted. So once again, smash and subscribe to our like button, tell your friends about us. We will want us to help you to continue to build your wealth in real estate investment. This week's Business Times front page, ladies and gentlemen, as you can see over there, it is the reporter actually quoted me that S-REITs are likely to report muted performance this earnings season. Let me share with you an enlarged version of the interview, okay, because this actually quote me, and let me just read that out, okay. This was actually on the front page Business Times interview on Monday itself, on 22nd. Now, they quoted me as veteran REIT investor and chairman of GCP Global, Gabriel Yap believes that S-REITs earnings would be muted at best, with foreign REITs facing a deadly combination that includes higher interest rates, number one. Number two, foreign exchange costs. Number three, gearing. And number four, uncertain capitalization rates changes. S-REITs with predominantly foreign assets in China, the United States, the United Kingdom, and certain parts of Europe would likely underperform. This is exactly what I said, and this is what we have been preempting GCP Global investors who are predominantly high net worth individuals, family offices, and REIT index fund managers in preparation for this results. Now, so far, what has happened? Let me just go through that review in Capital results. But before that, let me actually share with you our latest interview that just came out this week, and for CNA, that's Channel News Asia Money Talks podcast. You can actually view it under the Channel News Asia website, or actually look at GCP Global Facebook page or our LinkedIn connection. And of course, if you are actually already a subscriber to our emails, you will be receiving this in detail. It's almost a half an hour interview, but we actually talk about the ABCs and the XYZs of REITs, what to avoid, what are the foreign REITs that you should avoid. In fact, practically all of them. That's what I've said in my interview. How were we able to actually preempt our investors to actually prepare for this kind of negativity, and how will we be able to avoid that, as much as basically how to position to make money, as in my book Making Your Millions in Real Estate Investment Trust. That's how we did it before. That's how I had been able to retire in my early 40s and be able to actually share this knowledge with everyone. So do subscribe to our button. Two of Business Times, where I was quoted to saying that apart from industrial S-REITs, GCP Global Yap says that he would be paying close attention to counters in the retail sector, the industrial sector, and the office sector which could outperform. So last week, ladies and gentlemen, in fact, the last two videos, we have talked about industrial REITs. So we have mentioned the likes of Capital Land Ascenders, MIT, MLT, which also reported results, and ESR. Now, this week, let us give you a glimpse of the two sectors that we have been talking about and we have mentioned before in our past various media interview. As you can see on the left side, we were on Channel News Asia itself. Talk about REITs in this forthcoming results. We were at Business Times podcast, interview where we actually mentioned about which are the REITs to avoid. So let's move on. Let's look at the first one. That's Capital DC Reit, which reported results. Now, a year ago, we have already warned about Capital DC, and this is actually in our YouTube video, which was entitled "The Crash of Capital DC Reit." Boo boo! This was published a year ago. Since 1 year ago, how has Capital DC performed? You can see, ladies and gentlemen, Capital DC, yes, has plunged very badly from as high as 260 to down to 176. Now, as you can see from the purple line, it's just one straight jump in the last 2 years for Capital DC. And notwithstanding that REITs have recovered in the last 1 month, you can see that the performance of Capital DC has continued to be lackadaisical. So for those of you who have followed our channel, and again attending our classes, you notice that essentially we have mentioned, as you can see from the green arrow there, in our last two class ago, that was actually in August itself, we have continued to tell you that, hey, stay off Capital DC. We have warned you at when the price was at 260. We warned you again when the price is 228. Right, because one is that the downward channel has not been broken. Two is that more bad news on Capital DC will come about. And three, we did not like the acquisitions of Guangdong 1, 2, and 3 data centers, which came at the wrong time. As for those who've been attending our classes, we told you that in preparation of higher interest rates, it's key that REITs like Capital DC not actually endeavor to make huge acquisitions. And indeed, what happened? Well, the customer that they actually service on Guangdong 1, 2, and 3 data center actually went to almost a default. And right now, according to Capital DC, they are negotiating with them to help them to actually go through this particular phase and make payments to Capital DC. In the meantime, who suffers? Not the management, not the customer. Yes, you are right. You, the customer, you, the client, you are the shareholder of Capital DC. You would have suffered. But of course, for those who attended our classes, we preempted you on this. Such is the vicissitudes of REITs. So being a smart and sharp investor and be forewarned on such eventually is key in making money in real estate investment trust. Okay, so if you look again at the chart, ladies and gentlemen, when the share price was attempting to break the 230 level again in December of last year, we told you it's a fake hit. So once again, for those who attended our December quarterly REITs class, you were spot on, we were spot on, and you were safe one more time. Okay, but now it's interesting because at the price of 176, it's basically coming to test the lows that Capital DC has seen ever. So is it time, therefore, to be accumulating it? Granted that data centers would benefit from digitalization, data center actually are moving from benefiting from AI. But is Capital DC one of the REIT that will benefit on this? Well, to find out in detail, we discussed this in detail. Yes, we always discuss in detail, providing deep, in-depth analysis, perspectives from various viewpoints in our quarterly REITs class. The next class is on 23rd of March. And ladies and gentlemen, yes, you can sign up before the end of the month. Yes, I know. There's 3 more days left before the end of the month, before the early bird special price runs out. So come to shares last week. What happened, you may ask? Well, exactly what we have forewarned in our classes and our YouTube channel. The facts are very clear. One is that property expenses actually jumped a woohoo 86%. Wow, that's a jump of 12.4 million to 23.1 million. Now, finance costs actually shot up, from 17.9 million to 25.8 million, a 44% jump. Again, you will say, wow. But then again, at GCP Global classes, we already told you beforehand. Now, distributor income, not surprisingly, fell 18.5% from 93 million to 78 million. Once again, you will say, wow, but then again, we will tell you that yes, it's something we will forewarn you in our investment class. Last but not least, the most important aspect, that's DPU for you, the shareholder, is going to be down a terrible 16%. Okay, it's going to be down from 5.16 cents to 4.33 cents. Now, already Capital DC trades as a premium, valuation to the market. So, and if you're getting less than 5% yield on it, while you're paying close to almost 1.7 times price to book value, is it actually worth it? You may be asking if you're still holding to the stock. If you can't make your decision and see whether the factors affecting Capital DC, notwithstanding there is a good REIT, then do come to our classes, because these are the issues that we discuss in detail at length, because we spend at least half an hour on a particular REIT of interest, and as Capital DC urge and move towards its historical low price, this becomes a rate of interest for us. This week as well, Frasers Centrepoint Trust came to the market to raise 200 million for the further acquisition stake of Next Shopping Mall. Now, essentially, this is something that we already preempted GCP Global investors, students, investors about this transaction. And again, in my YouTube video, just actually 4 months ago, as you can see over here, we actually shared that after selling out of Frasers Centrepoint Trust at $3 and above, in February of 2020, we actually are building back a stake, when the share price goes below 210. Now, why is that the case? First, let's take a look at this, right? This is the chart of Frasers Centrepoint Trust after we have sold off, which we actually mentioned in our book, Making a Real Estate Investment Trust. We bought back heavily below 210. So even though the placement price was 2.18, actually our buying cost is way below the placement price of 2.18, which was concluded on Thursday itself. You notice that for those who came to our GCP Global Student Investment classes, we actually told about this eventuality in September, and true enough, 2 months later, in December and November, the share price of Frasers Centrepoint Trust went below $2.10. And once again, ladies and gentlemen, you'll be asking, how were we able to know about this? How were we able to pick bottom again? But well, let's retrace back. Now, I just want to show you, ladies and gentlemen, again, this is actually the my holdings as the top 20 shareholder of Frasers Centrepoint Trust up to 2019. You notice I was listed as the 16th largest shareholder with 2.12 million shares, under my name, that's Gabriel Yap. And once again, the table on the right is the my name that appeared as top 20 shareholders list of Frasers Centrepoint Trust, on the various years. You notice that from FY 2007, granted that they listed in 2006, so FY 2007 was the first year of their annual report. You notice that since then I've been major shareholder. So again, in my book, Making a Millions in Real Estate Investment Trust, you see the same table. Now, this is my book, Making a Millions in Real Estate Investment Trust. Now, I've listed in table 19 how I actually accumulated shares above 2 over million shares, and then sold out when it went above $3 in February of 2020. You notice, ladies and gentlemen, fall in love with your wife, love your kids very much, but never fall in love with a REIT, because a REIT, unless it does not, on those years when it's anticipated not to deliver, you can see, that the DNA sometimes changes, and the ability to be able to deliver for you, will not be there forever. So remember, ladies and gentlemen, this is a key thing in making millions in real estate investment trusts. Know when to come out, know when to actually go in a big way, even though it's a good read. So, ladies and gentlemen, let me share and retract what I said in my video 4 months ago, right, on Frasers Centrepoint Trust. I've mentioned, ladies and gentlemen, that essentially, they are probably doing something right. They have do divestments to raise funds, and true enough, this is a management that's currently very over enthusiastic in making and cementing their number one position in shopping malls in Singapore. Yes, they are number one, but what's the big deal, ladies and gentlemen? Right? You as a shareholder, the key thing is that you must be able to benefit. So you have to ask yourself and scrutinize your reasons for investing in Frasers Centrepoint Trust. But as we always say, REITs sometimes do the dumbest thing, in the in the wrong timing. So you as investors, as long as you stay sharp and sagacious, you are able to pick the right moments. And true enough, for us, we were able to amass, quite a heavy volume on Fraser Centrepoint Trust below $2.10. Exactly was what we told you in our REITs quarterly classes, as well as actually our YouTube video, right? So for us, essentially, finally, the hurdle on Fraser Centrepoint Trust has been removed, right? It is clear that retail sectors, as you can see from this table, Frasers Centrepoint Trust has been the number two best performer, despite the sell-off on Friday because of the REITs pricing. Can you imagine, the day before the pricing was 228, and because of the REITs, the share price collapsed another 6 cents. But notwithstanding that, Frasers Centrepoint Trust in this January sell-off in retail sectors, in REIT sectors. And remember the three sectors I told you: industrial, office, and retail. You can see that this is a list of 8 REITs. You notice that only Maple PAC has actually underperformed the rest of the market. The rest of the market are down by about 6%. 7 of the 8 retail REITs actually outperform the market. So as you see, that goes for our sector picks, and you can see how we are able to do that. And if you are going to ask me exactly how do we do it and how were we able to predict, exactly as what I said in my LIANHE ZAOBAO interview, it is new to anything. And our success in the last 35 years of teaching and the last 21 years of concentrating on real estate investment trust is down to hard, right, rigorous work, knowing the REITs in and out of your hand, and therefore being able to predict before what they are going to do next. That is the whole idea. And that's how you position heavily in real estate investment trust and making good money out of it. Now, before we end this week's video, I just want to show you some example. So those of you who have followed us very closely, you notice that we have won on Prime REIT, we have won on Manulife REIT, and see how they have collapsed a little more. Now, in the 3 weeks ago, we mentioned about Elite Commercial, and we asked you whether, for those who are subscribing for the rights issue, whether you're throwing good money after the bad. Well, it's already been 2 weeks now, and you can see that the share price of Elite is still below the rights price of 27 cents, right? And remember, the rights price of 27 cents was already a 10% discount from 30 cents before that. Well, again, ladies and gentlemen, to build your wealth, you notice that one of the key things is never to throw away good money after bad. Many have asked why I was able to retire in my early 40s and enjoy life and give thanks. Well, that's exactly what it is. Avoid the bad apples and bet big when the time is right. So once again, till next week, we traverse for you the REITs continual corporate results season. So subscribe to our and enjoy our class, or rather our channel, and do subscribe for our class because you have only 4 days left before the early bird special finishes.